Good morning, everybody. It's Tuesday, August 20th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down a quarter at $4 even. November soybeans were down a penny and 3/4 at $9.74 1/4. And December Chicago wheat was up a penny and a half at $5.53 3/4. This morning, the USDA announced export sales of 132,000 metric tons of soybeans to China for 24. Also announced was 239,492 metric tons of soybeans to Mexico, also for 24. Yesterday afternoon, we got crop conditions. Corn came back unchanged at 67% good to excellent. That's versus a 5-year average of 60%. Soybeans also unchanged on the week at 68% good to excellent, sharply higher than the average 5-year average of 59% there. Winter wheat harvest, 96% harvested. That's versus 93% the previous week. And spring wheat was rated 73% good to excellent versus 72% the week before. A couple of announcements on the Pro Farmer Crop Tour last evening. Came back with the Ohio corn estimate at 183.29. This is versus 183.9 last year. The USDA currently has Ohio pegged at 188. They do not put out a bean number, but they did do pod counts, and bean pods were slightly lower year over year for that leg of the tour. South Dakota came back 156.5 for corn. That's versus 162 where the USDA is at. And this leg of the tour had bean pods slightly higher than the previous year. Good morning, guys. Hope everybody's doing well. Ben, we were talking before the show. Still, a battle between weather models, certainly probably affecting, the soybean complex a little bit more at this stage than corn. We've got a whole lot of data being thrown at the market, back-to-back days of export sales. So why don't you kick us off this morning, then we'll throw it around the room.
Sure. I think beans have priced in a lot of negativity. We've seen a decline in trading prices that we haven't seen in many years. We had to reaffirm that with a really big yield, record type of yield from USDA and the August WASDE. But we've gotten down here and we've been doing business very consistently now for going on about 2 weeks. We actually sold some beans to Mexico this morning, which was great to see, some more to China. And we have a short that's pretty large that's traded this. And from a percent of open interest, it's pretty large. I think it's one of the third or fourth that we've seen since the trade wars. And a weather forecast for finishing that is not that great. And in corn, we're probably mostly made, not to say that it can't suffer a little bit for some poor finishing weather, but with some of the yield models that we see, we feel pretty confident that the corn crop is large. But soybeans, you could quickly, with a 2 bushel reduction, make that balance sheet not so burdensome. And I don't want to, I'm not a great analogous year guy. It's not really my thing. But we have had some years that always stick out in your mind of what can happen with soybeans if finishing weather is poor. Now, granted, it's getting started a little bit late, but we did have quite a few beans that were planted late. I think as of the June acreage number, at that point, there was 13 million acres of beans that were not planted. And a lot of that was where the maximum amount of negative weather is supposed to be over the next couple of weeks. So I look at all those things, and I just think soybeans would, from a trader's perspective, is just not something that I would like to be short. And I know that we're heading into harvest, and I know the balance sheet looks really good, but we've traded that. We're doing what we need to do. We need to do business. We need to keep doing business. So I think there's a fine line between balancing value of soybeans with continuing to do business versus taking ourselves out. And a pretty big trade here that also may have been somewhat lured down with the oppressive nature of old crop corn being delivered. So that ratio has plenty of room to correct in soybeans. And I think that if we see the weather continue to not look great for finishing weather and we keep doing business, I think that beans could see some nominal price appreciation.
Very good. Yes.
And that's not an official recommendation. That's my opinion.
That's Ben's opinion.
Yeah.
Dustin, we saw overnight corn open interest on yesterday's rally down 18,236. A couple thoughts there.
Well, they're very short corn, right? And we're heading into, kind of a key date for corn. The end of the 2023 season is this, basically the next 2 weeks, going into the last trading day of the month. So, we've talked a lot about the subscription to, how many traders are short in anticipation of paper contracts, paper longs that need to come off just end of the growing season. I'm not so sure that there's a lot of basis only contracts, and compared to other years where this seemed to be kind of more evident. And I think it's just because the price is broken so far. Like, if you rolled a basis only contract from harvest, for example, it's very unlikely. And, when you talk about basis discount from that roll cost, you've lost more than 40% of the value of that contract from October. So that would eradicate a lot of the equity in those. More than likely, in my opinion, part of the recent weakness is bushels that are coming out of the bin that were unsold, or perhaps on DP. So this is just my opinion. Again, just not talking, too black and white here, but a lot of times when we have too many paper longs, the very last trading day is a big day. If it's more about just pulling bushels out of the bin that are unsold, maybe we've worked through a lot of that, and that's why we're starting to see some strength here.
We I guess the other thing that caught my eye this morning in these union strikes, potentially for the Canadian rail system. I don't know if you guys have looked at that here this morning. As we're coming into, starting to come into harvest, that could be an interesting conundrum for basis. And we've seen rail disruptions in the past, but this is pretty big with, the unions in Canadian National and Canadian Pacific, both trying to get labor deals done, with the Teamsters. And they were saying this morning that any disruption would result in roughly about $733 million in daily losses there. So pretty significant.
Yeah. I don't know what the impact would be on markets offhand, to be honest.
Probably basis, right?
Yeah, it could be for sure. It might be, I'd have to examine that more to see what we'd expect for impact on markets. But whenever whenever grain's not moving, it's usually not the best for markets. But for example, like if that causes any sort of additional, business that can be trucked over the border, maybe that's a basis push for some U.S. growers. Let's say, for example, one thing that we usually find to be favorable is like Brazilian strikes, because that business has to shift back over to the U.S., right? So it's a short-term positive thing, but anything long-term that causes a spike in global prices is a lot of times that is paid on balance because that grain still exists in the back end. So I wouldn't have a strong opinion on it right now.
Any other thoughts here this morning, guys? Outside of export sales, Justin, maybe just a few thoughts what you're looking at overall in the markets.
Yeah, no, I mean, I think Dustin and Ben said it pretty well. Funds have been covering some of the shorts, especially in corn, into farmer selling. So there's a lot of old crop grain moving right now, kind of freeing up bin space. So I think that'll continue. We are going to have a really big crop. It's just a matter of how big, to Ben's point. Soybeans have to finish off strong. I think corn's going to be a record either way. It's just a matter of how big of a record. Is it 184, 180, 187? I think until we get in Pro Farmer Tours, obviously going on this week, so we're going to get more and more yield data, and they're generally good, especially on corn. Now beans they can miss pretty hard because they're just counting pods, and it really matters what the bean size is and what kind of fill we get. But on corn, I think at least the trend is generally accurate. what we're seeing. So I don't think there's a surprise in Ohio and Dakota kind of being on par, a little lower than last year based on what we heard. So we'll see when they get into northern Iowa, Minnesota, see if those problem areas can be offset by what we think Illinois, Indiana are going to look like, and most of Iowa, call it the 2/3 of Iowa. So yeah, it kind of makes sense to me. Corn, we are short covering, we are doing things, but we're 10 cents off the low. So we're kind of just chopping around in here. Feels like any kind of little rallies we're getting sold by the farmer, and we break back towards the lows, and feels like we run into some business and some fun short covering. And I think that makes sense with what we know today.
So the markets are operating as they should at this juncture.
I think so. So there's another new piece of information, or if there's way more farmer selling than that has to happen, something like that. But that $4 number in corn specifically is kind of a really boring area for where everything fits in with crop insurance and hedges. And if it goes, we've talked about this before, if it goes a lot lower, that'd probably be better for a lot of people, or a lot higher. So you kind of 350 to 450 is where you really get a lot of participants to jump back in the market, I think, on both sides. So $4 is kind of a no man's land.
Yeah, one thing I'd note too, like just yesterday, this is highly anecdotal for South Dakota, but like you had mentioned it, that their yields are quite a bit off where they were last year. We have to remember that that's over 5 million acres of corn. These are the best producing counties of South Dakota that they're touring. Those are also the ones that were hit with that weather early on in the season. And, last year they're at a 152. The USDA has them at a record 162, tying the prior record. So those types of things, we tend to be hyper focused on Iowa and Illinois. And we forget there's a lot of acres still in places like South Dakota and Minnesota that would have a big impact on it. So to your point on the big records that people keep, kind of talking about, a lot of times you hear that coming out of, outfits that are centrally located in Iowa, Illinois, and not thinking about all the fringe areas. So,
yeah. And that's, to get those big over the tops, you kind of have to have everybody kicking on all cylinders. And I will say the finishing weather for corn's been great. It's so cool for August. I think it's going to be really good. But yeah, I think that goes back to the point of, at some point we will have written down a yield. Somebody will have won the contest of who can write down the highest yield, and we'll overshoot it. Whether that's already happened or not, we'll find out. But that's why these seasonalities tend to happen, where you make lows in between September 1st and October 1st, because you've got max bearishness out of the way at some point.
Yeah.
I think that just looking over for the next week, I really think that a barometer for this market will be how December acts when September goes up. How much of this flush, this big expansion and spreads, how much of it was related to just the old crop purge from on-farm stocks? I spoke with a merchant from an ABC last week, and it was one of those days where corn is trading, 95, where we spent a lot of time, 96, and markets feels dead. And I call him, and he's like, "I'm slammed." I'm like, "What are you busy from?" And he said, it's just desperation, fear selling across the board right now from everyone. They're just getting out. So does that create and forge a short-term low, or is the crop that's behind it big enough to force the east down to where sub traded pretty quickly? So I think that'll be a really something worth watching. And I agree with Justin. We're in the worst spot right here. If we could see 440 or 450, I think it would get people excited. And if we could trade 350, there's plenty to do there. But at $4, it's just kind of a handcuff, no man's land decision place on new crop.
Is that the same, guys, the same math on beans? Are we similar areas there for when you look at it relative to crop insurance and everything else?
I think you're a little further away on beans still. But, again, to Ben's point, if, we're trading a pretty big bean yield, and I can't argue that could definitely be the yield here. But we probably have to get in there and see. If, the counter to, getting excited about a bean rally is the world bean balance sheet does not look good. Now, if we end up with a 49 yield or something. Obviously that changes all those types of things, but I think there's still a bearish backdrop to all these things, you know, unless you have a South American problem or China really steps up here. We've started seeing some sales, which, you know, the good sales years, we're doing, you know, 2 million tons a week going into harvest. So it's picked up from zero, and it's encouraging to see it. We're finding some prices where they're stepping in, but also got to remember that we are pretty far behind on any kind of a really good pace for China yet. So that wouldn't get, you know, any kind of big rally. I think, you know, if you were to have a $50 to $1 short cover rally in beans, I think there's gonna be plenty of selling into that. So
Very good, guys. Any parting shots here? We're good to go. All right, we just came into the open. D's corn down 1 3/4 pennies, 3.98 3/4 is the last. November soybeans down 3 at 9.73, and December Chicago wheat is up 2 at 5.54 1/4. We appreciate everybody tuning in on a daily basis. If you like the show and the content, throw us a like and subscribe. Doesn't cost you anything to do so. Certainly helps us with YouTube algorithms and all that stuff in that world, but we certainly do appreciate everybody that tunes in on a daily basis. Throw us a like and subscribe. We're very thankful for that. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We look forward to talking to you again tomorrow.
Thanks,
The
Dad.
War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.